Caterpillar, the world's largest maker of construction and mining equipment, posted third quarter estimates that top analysts forecast and raised its own full-year forecast. Though the stock hit a 52-week high today, shares fell after the company said some costs will rise next year. The CEO, Douglas Oberhelman, joins us now from Peoria, Illinois. Mr. Oberhelman, welcome to Bloomberg News. Thank you so much for joining us.
Thank you, Mark. Great to be here with you today.
Sir, as we mentioned, your company did announce today that profit for 2010 for this year is going to be about $3.80 to $4 a share. In July, that forecast was $3.15 to $3.85 a share. What happened? Is that increase due in large measure to what's going on in emerging markets?
Well, it's due entirely to increased business results, higher shipments in our case to our dealers around the world, and I would say it's across the board. In fact, our retail sales, that is tractors in the dirt, hitting the dirt in September, were actually up more year over year in North America than they were in any other region of the world. So the recovery is happening. We're seeing it now in North America at an increasing pace in our case, and it's really to fulfill demand across all zones.
Mr. Oberhelman, you said tractors actually hitting the dirt. As you know, Caterpillar is usually seen as a bellwether for what's going on in the global economy. If we see, I guess before the term was shovel ready, we see tractor ready. What sense are you getting what that means for the global economy going forward, first here in North America?
Well, it's good news. It's anemic growth, however, and we've studied past recessions going all the way back to the Great One. This recovery has been one of the slowest ones. I don't think that's a surprise to anyone, both in North America and elsewhere, and there's lots of reasons, studious reasons for that, but we are seeing it. And granted, last year was a very low year for us to recover from, but the numbers are increasing monthly for us in North America and elsewhere, and it's starting to happen, and we're pretty optimistic. But I would say growth next year, as we talked about sales approaching $50 billion in our case, is probably slower than it would have been in past recessions, certainly slower than we'd like to see, but on the way up.
Your biggest sales growth in the third quarter was in Latin America. Revenue there nearly doubled. What's happening in Latin America that is giving Caterpillar such a sense of optimism there?
Well, lots of things are happening in Latin America. I lived there in the early 80s, and it was an interesting time at that point because all of the Latin American countries were bankrupt. They had no reserves. They owed all kinds of debts, and really over the last 30 years have done a tremendous turnaround story with their own fiscal balance sheets at a sovereign level. What we're seeing then is as they develop, they use those balance strengths and the power of the reserves they built up, they're putting it in things like infrastructure. Brazil is red hot right now. There's all kinds of events coming up, two separate sets of games coming, and really across the board, a well-managed economy that we are seeing now finally really grow quickly, and it's a great tribute to the way they've managed their economies over the years.
And you speak of Brazil. Over the past 5 months, you have announced that you're going to be building more factories in Brazil and in China. Economic growth in those countries is even outpacing what's going on here in the United States. Does this give you now a sense of urgency to go on with plans perhaps to build even more factories around the world, perhaps more here in the United States?
Well, we've had several announcements, actually many announcements over the last several months, both inside and outside the U.S. in terms of new factories and growth. We are adding a second plant in Brazil. We've been there 50 years with one plant outside Sao Paulo. This will be our second one, about the same size, recognizing the growth in Latin America that we can supply from Brazil as well as export. We've had a number of announcements in China, and we've had a number of announcements in the United States, and I'm happy, really happy about that. We added an excavator, hydraulic excavator plant in Texas, transferring production from Japan to the United States, and those excavators will be used right here in the United States. We're talking about a mining shovel investment here in Illinois for a new product line. Very happy about that, and a huge expansion in our mining truck business right here in Illinois as well, and all those will add new jobs over time.
Sir, you said that the company is expecting what you call cost headwinds next year. Should investors be concerned? Is that why your shares were down today?
Well, I don't know what you can't look at that share price every day, and I certainly don't. I'm interested in results over time. Now, your question on cost, we did mention in there cost headwinds, and we did that because in 2009 and 10 we've had a bit of a material cost tailwind. We see that going away. I don't think it'll be a strong headwind. I don't see inflation raging over the next year, but it won't be the bit of a tailwind we've had, and that's why we called it out as we did.
Sir, in our last couple of minutes, let's talk business here and politics in this country, because I guess the two are intertwined. You said today that, quote, to drive economic growth, we encourage government policymakers to advance pro-business initiatives and a growth agenda. Am I to take away from that that you believe that the Obama administration has been or continues to be anti-business?
No, I'm not going to say that. What we're concerned about, and the reason we put that in there, is all of the debate around easing and raising taxes at a time when the economy is so fragile. We have never seen a recession that's been taxed into recovery. And we worry about that here, particularly with the competitiveness of U.S. manufacturers on a more global scale. We have competition in our business in every country on this planet almost from non-U.S. players.
Right.
And if we're not careful and we face taxes they don't, we face input costs that they don't, we become less competitive, means less jobs in the United States.
What's the solution?
And that's really the kind of the cautionary we were putting out there.
What's the solution, sir?
Well, one of the solutions that we're fond of and I think would be at a very immediate impact, and we've talked to the administration and others about this, legislators, is that a lot of U.S. companies have lots of cash parked overseas today. The reason that's parked overseas is it faces a 35% tax rate when it's brought back to this country. We're the only country in the world, developed country, that does it that way. We think if that we were allowed to bring those back at a minimal rate or no rate, we could put that to use in this country like our non-U.S. competitors do in their countries,
and we should say, for historical purposes, that is something that happened not too long ago, where that tax rate was dropped down to 5 1/4 so that money could come back over here. Is that one of the things that you think needs to be done to help improve the employment picture here in the U.S.?
Well, I think that's one thing that could immediately help. There's no question about it. And what won't help is a big spike up in tax rates here at the first of the year. And we just can't allow that to happen in this country. Everybody knows we've got a fiscal deficit problem in the United States and a lot of other countries.
Yeah.
That's a long-term situation. It's going to take a while to get out of. But taxing at the levels that are contemplated right now really would not help our economic recovery at all, although it would arguably help the deficit to some degree.
All right, Douglas Oberhelman, the CEO of Caterpillar, joining us from Peoria, Illinois. Mr. Oberhelman, thank you so much for your views. We appreciate it.
Thank you, Mark.